We live? I think we're live. We are live. So good morning, everybody. Thank you for joining me. So the first and most important thing that you will hear this morning is the fact that the UK government has put their tax cut plan back into possibility. So what did that do? It shot up the British pound. The UK interest rate just dropped down, and the world markets all liked it. Again, so the UK government said, yes, tax cut plan back in motion. Okay, the UK, as the US dollar goes up and down, the UK pound went up, the UK interest rate went down, which makes it more appealing to invest in their market and worldwide markets, our markets, any markets overseas. So world markets like that. The Dow was up maybe 150 points pre-market, and then it shot up to 300 and change. Right now it's sitting just under 300 points. So let's talk about potential what could happen with CPI. So before CPI comes down, because we have 4 minutes, understand the estimates, okay? The estimates are coming in at 8, 8.1, 8.2. So 8.1 is basically the realm that we're looking for. Anything higher than 8.1 is a bear case scenario. It means inflation is still very strong and the Fed will have to use large rate hikes. We had a Fed, I forget the gentleman's name, came out yesterday, and he said if inflation does not curb itself, the Fed will be stronger and more hawkish, okay? So again, it's a big decision yesterday. We sort of had a preview yesterday with PPI as they're somewhat related, but understand CPI comes in 7.9, 8.0. Markets go up, and I'm going to tell you where the SPY could go and where the S&P can go. CPI comes in 8.2, 8.3, 8.4. Holy shit, the Fed has to act and markets will go down. So let me just bring out, some people said this is a whiteboard. It's actually just a massive size Post-it note. But you can see my chart of the SPY. Now we had the Fed announcement a couple weeks ago, 3 weeks ago. We curled around here. So we found a baseline, and you can see on the baseline, this is 2 weeks ago, the low was 362.59, 57.59. The reason I bring that up is 2 weeks later, we're literally 2 points under. So 62 to 60, 59 to 57, 57 to 55. So we're following the same pattern. So understand the same pattern. The last time we went all the way to 378 on the SPY. So when you have my bull case scenario, if numbers come in cool, you're looking at all the way up here. I have 372 bull case. Understand we're sitting at 359, or we closed at 359 to 372 would be a 13-point move. That's 3.5%. Now a bear case scenario, because we still are in a bear zone here. If CPI comes in hot, understand we will drop. Now I've got 346 on the bottom end of my chart because again, I'm anticipating a 3% move. Now if CPI comes in as expected, then the markets are probably going to try and fool you. All right. I've said that before. Institutions, hedge funds, banks, they are not your friends. The analysts, when they come out with a price target, they're not doing it for you. They're doing it for them. They already have positions that they get into before. Anyway, let's just move past that. It doesn't really matter. The institutions are there to fool you. They're not your friends. They're there to make money. If they're making money from somebody, they're making money from you or other retail traders like me, him, her, whatever it is. When they come out with a price target, guess what? They already have their positions stabilized. So if they're coming out and they're saying, okay, price increase on Apple, guess what? They're already extremely long Apple. So they've already got everything done. So again, when we process CPI will talk about inflation. We'll talk about the range. We'll talk about month over month. We'll talk about year over year and the potential results on the market. Again, I mentioned this the first and second day of the new quarter, which would have been October, 1st, 2nd, 3rd. Institutions, hedge funds, banks, they started buying into the market. All right, they understand it could go a little lower. However, they're taking long-term positions. So when some of your stocks got beaten up, Apple, when Microsoft got beaten up, when Google went under 100, people went, boom, let's buy some of that. Same with AMD and a couple other chip stocks. They're still struggling, but you saw Rivian take a hit off of recalls. And then all of a sudden, Rivian pops back up because they're buying Rivian. Rivian still has cars out. The timing it takes to fix the defect is maybe 1 month to fix all of the cars because there aren't so many cars on the road. Okay, so again, CPI, if you have any questions or comments, or you want to wager your guesses, put it in the comments on the right, because we are going to talk after CPI and we watch it together. We'll come out and we'll talk about the potential, reaction to the market and what's a good entry point. Just because, let's say CPI comes in weak. Oh, let's get it on, Carlos.
All right, welcome back, everybody. We are just a few seconds away from that September CPI number. The last time this happened, it was not good news. It was a hotter than expected number, and since then, we have lost $36 trillion. Take our 4.7 trillion that's come out of the U.S. market, down 12.1% on the S&P 500 since that time. This time, we're expecting a number month over month of 0.3%, year over year up 8.1%. Let's get right over to Rick Santelli. Rick.
All right, let's see what they bring in. The market is getting crushed.
Let's start out with CPI for the month of September, up 0.4 on headline, double the expectations, and that is the highest since, June, when it was at its peak at 1.3. That was the highest since 2005. If you strip out the all-important food and energy, also 0.2 hotter, up 0.6. That's the hottest since June, when it was up 0.7, high water mark all the way back in April of 21, up 0.9. Year over year numbers, 8.2, hotter than expected, but cooler than the rear view mirror, 8.2. Until we get a revision, it follows 8.3. The high water mark here was 9.1. That was in June, going back 4 decades. And finally, year over year, strip out food and energy, also hotter than expectations, up 6.6. That follows 6.3, and 6.6 is a new high. The old high was 6.5 in March. That went back to 1982. But in 1982, we went all the way up to 9.3. So even though it's a new high water mark, it doesn't change the comp back 4 decades to 1982. If you look at yields, they are just skyrocketing. We're almost back up to 4% in 10s. Now let's go to initial jobless claims, 228,000. That is up 9,000 until we get a revision to the 219,000. And on continuing claims, 1,368,000, darn close to expectations. Very close also to the rear view mirror, 1,361,000. But we can really see the yields have shot up here to 4%. And if you look at what's going on with regard to 2-year note yields, they're all the way back up to 4.32. So this is a hot number. And with the expansion on that 6.6 on the core, and we all know it's about food and energy, this is definitely going to pique the ears of our central bankers domestically and globally. It's going to make the dollar index much hotter. And it may also complicate some derivatives that you were talking about earlier. I used to run a derivatives products group. There's 2 things you can't control. What we call discontinuous volatility. When gilt prices and yields get crazy, you can't make your periodic adjustments that you need to make. And option volatility. There's no way to compensate for gap jumps and option volatility. If your models are replicating your pattern of payout based on options, volatility moves up or down in a dramatic way. There's very little you can do about it, but take a hit. Becky, back to you.
Take a hit. That's what we are seeing in the markets right now. Rick, stay with us, but let's run.
All right, perfect. So let me explain what happened. Similar to yesterday, when the PPI number came in as expected, right? People were expecting 8.1. It came in at 8.1. Then you removed food and energy, and it was actually 0.2 higher. The estimate was at 0.2. It came in at 0.4. We saw the same thing. It's almost parallel or mirrored. We saw the same exact thing with CPI this morning, meaning it came in just slightly above estimates. And when you hear Rick Santelli saying, well, when you compare it to last September, we're actually down. And when you compare it to the all-time high of 12.2%, we're nowhere near that. He's sugarcoating it. This number that came in this morning was not acceptable. The Fed, which came out yesterday, Fed chairman came out and said, if the numbers come in hot, the Fed will have to do larger increases. So I know everybody and myself are focused on today and what's going to happen today. But understand the Fed basically said, come November, 75 basis points, which we knew was on the table, possibly 100 basis points, which would drive the market down. What else drives the market down? Well, you heard him talking about the 2-year and the 10-year. The 2-year note, which was at 4.3, right? And then went back to 4.25 interest rate, spiked all the way up to 4.42 this morning, about 15 basis points. The 10-year Treasury note, which was sitting at like 385. Yesterday went to 395, and then it was 391, 385. It spiked above 4%. With that said, the US dollar is also going up. So these are all three key factors that are bearish for our markets, okay? And then you look at oil. Oil probably dropped. Gold probably dropped. Bitcoin and cryptos probably dropped. So let's just delve into the crypto realm real quick, okay? If the markets do get hit and we see the SPY drop from 360 to 346, you're likely to see Bitcoin in the 17,000 range, okay? Yes, I know we're sitting at 18.5 or maybe we're at 18.2 right now. Bitcoin can drop another 8 or 9%, which is pretty substantial because crypto has been keeping a narrow range over the past few months, even with the market's decline and then increase. Okay, so again, the Dow is down probably 390 points right now. It's not over. Any spike in the market today, and again, I'm going to go out a week or two. I'm not going to trade. I'm just giving you my strategy for today, because when you have a strategy in place, you must execute. If you just jump in or out of a position, you're going to get screwed. The markets are here to manipulate you. So you're going in, you're like, oh, this is going to drop like terrible. You get into some puts, it drops, and then it spikes up to a higher point. So understand, again, the institutions, the markets are here to trick you. The Dow went from plus 300 points to minus 300 points like that. And then it fell to 450, and then it came back to 300, and now it's at 400 again. So there is going to be major volatility, major moves today. Again, somebody, an institution, a few institutions, they could jump in at any point and start buying up certain stocks in the market. Your Amazon, what stocks are they going to buy up? They're not going to buy up your Roblox stock. They're not going to buy up Lucid or Neo. When institutions and banks decide, okay, well, the market just got beaten up this morning, we're going to take long-term positions, because I've mentioned that some funds have to always remain bullish. They cannot short the market. But when they're going into certain stocks, they're going to go in, and I mentioned this to Discord the other day, to material plays, right? Material plays have been beaten up. They're going to go into certain stocks that are industry leaders, okay? So when you're talking about an industry leader, if you're talking about chips, you're talking about NVIDIA. If you're talking about streaming, you're talking about Netflix. If you're talking about clouds, you're probably talking about Microsoft, okay? If you're talking about technology, you're probably talking about Apple. So understand, when you and I are like, oh, man, let's check out, I happen to like Plantier, right? Plantier has a good baseline at $8. It's probably under $8 right now. That's not the kind of stock that I would be investing in. I'm looking for best in class. If I'm buying any stocks right now, I'm looking for best in class. As far as if I'm playing options, understand there are going to be huge swings today. So my strategy with my options play today is, shoot, I'm going to wait on the sideline. There's no reason to get involved at market open. Say the market opens 9:30 a.m. Let's just see where the SPY is out, because I'll give you a real life example. SPY. Where is the SPY? Oh, there it is. Okay, down 1.6. Okay, it's at 350. Understand, before the announcement, the SPY was sitting at 360. It dropped as low as 349. So when I took out my bear chart here, my bear case scenario, which I showed you at the beginning of the video, was 346 on the SPY. So you're like, okay, Matt, you said 346. We're sitting at 350 right now. That's a full another % lower. That's 4 points on the SPY. I'm going to buy puts on open. No, because what could happen, and we've seen it before, is the market tries to fool you. So the Dow is down 400 points. The SPY is currently down 1.73%. At open, there's a couple of trickles here. Then all of a sudden you see them start buying the SPY, and you're like, oh, they're going to rebound it. They don't give a shit about the report. They're going to buy the market today. So you jump on, you're like, oh, let me get some calls here, whatever, blah, blah, blah. It shoots up, and then all of a sudden, 10 minutes later, it's dropping to a lower point. So again, if you're executing a strategy and you want to get into SPY puts, first off, Friday is the first expiration of tomorrow's options. I don't want to buy options with 1 day out. Why? Well, they certainly do move. Those are the same percent returns when you see someone say, got a home run there, I just returned 1,000%. Those are actually or also the type of trades that will blow up your account. So I'm here to help you process information, give you guidance, teach you how to trade more efficiently. But also, most importantly, I don't want you to blow up your account. Let's just go back right now. Compare who's trading to last year. 1 out of every 5 retail traders has left the trading market. 1 out of every 5. All right. Robinhood, who was our gauge during the pandemic, who had 30 million traders, are now down to 13 million. All right. They've lost 17 million traders over the course of the last 12 months. All right. 1 out of every 5 retail investment. So please have a strategy. Don't execute, don't get FOMO and say, okay, I know the market's going to drop 800 points. You could be right. And the SPY could go down to 346 as a bear case scenario, as I suggested. But I'm not going to get into puts until I see the market get a bounce. That would get me good entry. The same thing if you want to be bullish on certain stocks, and I'll mention healthcare. Healthcare is a good, when we're heading into recession, people want, or institutions want to be in healthcare. They want to be in material plays. They want to be in energy stocks. All right. They don't want to be in speculative plays. They don't want to be in plays that have zero growth. Let's just talk about when we could potentially bottom. All right. Let's use AMD as an example. Okay. Some of these analysts and people on Wall Street, when AMD came out last week and surprised everybody and came out with a pre-announcement to earnings, which are coming out in 2 to 3 weeks, and they said our revenue for the third quarter is going to be $1 billion less. And AMD went from 78 to 68 to 60 to 56, wherever it's at. Understand, until AMD and these other companies come out and their estimates for growth next year are 5 to 6% higher. Now, when they revise these and say next year's growth is going to be flat, that is when we're going to see the bottom, because that is when we're going to see a capitulation of the market and things will tank. AMD could go down to like 50, 48, 52, something like that. But there's going to be major players jumping in at that time. All right. So please, any questions, please ask on the right side. Stream is nice, able to catch it live. Good morning. So yeah, good morning to everybody. Again, what I'm expecting is volatility. So I'm expecting huge moves, meaning 100-point moves, both up and down. Right now, the Dow is falling more, so we're in minus 444. Again, my entry point, if I was playing puts on the Dow or the market in general, I would look for the market to bounce back and only be down 275 points, 280 points. If that happens, I'm grabbing puts. When the market or the Dow is down 447 points, let's just say the market was open right now, I'm not jumping in puts because number one, you're going to pay too much when something's going in the direction. So whatever stock you're looking at or option you're looking at, as it's going down, understand the IV or the cost to you, the premium cost for the option is going to increase. Not only is it going down, but people are trying to ask for more. So generally when I buy options, I'm buying counter to what the market is doing. So if I'm a bull, I'm buying bullish positions as it's dropping. But again, I need to be able to call the bottom, which I would never do a day like today, because here are the scenarios. And I'll give you 3 scenarios, okay? SPY is sitting at 349.55. Okay, so bear case scenario, market drops even harder, another 1.5%, and you see the SPY at 344, 345, something to that extent. Okay. Now understand what could easily happen is institutions can get together, collaborate of sorts, and say, you know what, we think 340 is the low end. We're going to hit 340 on Friday or Monday. When it hits 340, we're going to start buying. Understand, history tends to repeat itself. So we have midterm elections coming up in a few weeks to a month. I think it's like with the first week in November. So probably 3 to 4 weeks. Understand, heading into midterm elections, the market generally goes down. It happens every 2 years. Right? We have elections every 4 years, midterms every 2 years. The market goes down. Now, when does the market go up? Generally, right after elections as we head into the close of the year. So when we have elections and they're over, November 10th, 11th, 12th, whatever it is, give it market 1 or 2 days to settle, and then understand the institutions, the hedge funds, the banks, they're not telling you to buy, but they're buying themselves. So again, that's my longer term strategy. My longer term strategy is here. I'm going to bring my SPY chart back since we can kind of complete it right now. We still are in a bearish sentiment. So we're going to drop to 346, possibly lower. Again, I haven't figured it out because I'm not going to attempt to call the bottom. You can get in big trouble attempting to call the bottom. But it's likely that we're going to see some type of support. We need to see 3 straight days where there's support here. So we're not going to see it today. Today's a drop to 344 or 346 or 349. What's going to happen tomorrow? Probably something similar. Probably something not as aggressive. Remember, we have retail numbers coming out tomorrow. So not that aggressive, but something similar. But it generally takes a few days to get that turnaround. So if you want to be a bull or you want to wait to call the bottom, there's no reason, and I'm guilty of this. There's no reason to be the first person to say we have bottomed, okay? I like to say on a stock, we've bottomed, it's going to turn around, I'm going to grab a rebound, but I'm always early. So please understand, the market will give you time to jump into your positions, whether you're bullish or bearish. Now the Dow's down about 500 points. So what could potentially happen? I mean, we could see a drop close to 900 points today. I hope not. I hope they spread it out because understand, this isn't the market capitulation. So even if we dropped 1,000 points today, it's not like, okay, well, we did the 1,000 points. It's out of the way. Let's buy the market tomorrow. No, the likelihood is the downtrend will likely continue. The Fed is going to be extremely aggressive, and that's not a strong thing for the market. So what to focus on to understand when we could possibly see a turnaround? You want to focus on the 2-year. The 2-year needs to come down in order for the market to go up. You want to focus on the 10-year. The 10-year needs to come down for the market to go up. You need to focus on the US dollar. Same thing. At 114 or 113.50, the US dollar, it makes it more expensive. So again, if you're looking for the bottom or to say, okay, well, the market kind of bottomed there, it's found some support, you need to find some support before you take your long-term positions. With that said, got to get back to Discord. Everybody have a wonderful day of trading. Oh, yeah, real quick. We probably have a link below. I opened up a Moomoo account not too long ago. I got free stock. I got Coinbase. My buddy got Apple. DraftKings was there. You open an account. You use the link below, which is our link only. You open up an account. Don't even deposit any money. You get 1 free stock. 1 free stock. You deposit $100. When the $100 clears, you get 4 free stocks. You move your account. You don't even have to move a large account. You put $2,000 in. You get 15 free stocks. 15. So we're talking about free money. So even though, yeah, I have an account at Interactive Brokers, I have Robinhood, I have Webull, I have Moomoo, but right now I only use Moomoo. I don't really like Robinhood or Webull. The point is, free money. Use the link below. The message boards are much better than any other platform I use, and that's what I like because I like to share information. With that said, got to get back to Discord. Everybody have a successful day. Do not over leverage your account. Look for prime entries and make sure you follow your strategy.